following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
Good. This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You get great guests, and
well, listen.
Keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Believe in yourself and everything you can be. James Gardner. Market-wise, let's take a look at it out here. We have the Dow Industrials down 40, NASDAQ off 6, S&P's down 6.5, gold contract down $9.60, trading at $1,066.70 an ounce. Silver down 5 cents at $14.04 an ounce. Platinum down $9 at $8.45 an ounce. Copper down 4 pennies at $2.01 a pound. Light sweet crude flat at $41.81 a barrel. Bonds. The 10-year up 5 ticks, 126.26. 30-year up 19, 155.01. Bonds, once again, folks, rejected lower price, lighter volume. Want to go top side. That means higher price, lower yield. Pretty wild. King dollar. King dollar up 226 ticks, 99.85. Now, King dollar hit the $1 point out here today. We'll bisect and dissect that little baby, too. Euro. Euro down 19 at 106, and the yen is trading at 122.88. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so if we check out the SPY, folks, we're still dealing with the same benchmark. The benchmark we're talking about is November 9th. That's where the market came down for the second time off its highs. When I say the second time, I'm just going back to August 18th. November 9th, what we did is that we did 131 million shares. The high there is 209.49. Bottom line, Friday, you get up to the 210.12. Daily and weekly failed on both. Out here today, we've got to the 209.98. It's rolling over, and so the SPY's rolling over with lighter volume. So watch, this is going to be kind of cool watching how this shakes out. Now, let's go to the NDX 100. They sold this thing off pretty good. So the NDX 100, the Qs, what the Qs end up doing is that we still have the benchmark of November 9th. We did 33 million shares there. The high of that day is 114.51, $114.51. Friday, you go to the 114.57. You go 6 pennies over it. You close under it. We close at 114.48. Volume, 22 million versus 33. So that was a failure. The NDX had a failure on price and volume. Today, what do? You get over it again. You're going to close underneath it, and the volume even contracts even more. What does that set up? That sets up a run for the lower end of this, which is going to be the November 16th area, which is the 109 area. This is going to be wild watching this whole thing shake out, particularly because of Thanksgiving week. Because what we have here is that the markets are closed on Thanksgiving. The market's open till 9:30 in the morning to 1 o'clock in the afternoon on Friday. Wednesday afternoon's going to basically stall out. What I expect you're going to see here is a slow roll to the downside, but nothing dramatic until next week. Because I just don't see, we'll find out, but I just don't see that big downdraft this week. I certainly don't see any higher prices, though. That's the bottom line. Gold contract. Let's go take a look at gold. What do you have with gold? They're pressing the lows on gold. Gold traded to 1065 today. We've done 162,000 contracts. Now, That's lighter contracts than the last time we were down here, but it's still pretty heavy, the amount of contracts that are there. It's testing, folks, the low that was established last week on the 17th. We went to 1064.40, and we had 181,000 contracts. XAU. If we take a look at the XAU and this HUI, the XAU and the HUI, both of them are at their lows, but what they've also done is that they rejected all the lows last week on the daily and on the weekly. The lows that we're talking about inside the XAU and the HUI, and they had lighter volume, are the lows that were established at, in the XAU case, you're talking about $43.59. And the HUI, what we're talking is, the HUI, we're talking the 104.66, and you're at 106.36. In both cases, they need a sign of strength off this bottom. We'll see whether we get that sign of strength. Bonds. Now, the bond market continues to give us the most amount of information, the most consistent information. What bonds did out here today is this. The 10-year did 1.5 million contracts, big contracts, by the way, rejected lower price. We got down to 126.12 and just refused to stay there. You're going into 101.8 million contracts. This looks like it's going to be a small ABC up. Your A point on this would be 125.22, and your B is 126. So you're approximately 125 to 126. Yeah, so it's a point, which would get you to 127.12, which doesn't seem like a lot, but that's going to get you closer to the higher, well, almost to the highs. Because as soon as you get to 128 inside the 10, that is in a much larger range. The 30-year, what the 30-year had done last week is that the 30-year takes over a small swing point, did it with volume. 30-year, once again, just refuses to go into lower price. The 30-year is at the high of the day right now, which is the 155 level, or 155.90. 155.09 rather was the high. This 30-year, man, is right next to its highs. The highs that we're talking about here is 161.17. I expect you're going to see that 30-year go after its high. Now, King Dollar. What King Dollar's done is this. You had the ABC structure on the way up. We've hit 100.06 today. You've done 27,000 contracts. And this is pretty cool. It's really subtle, folks, and we'll see how this plays out. But what this has done is the last, yeah, it's underneath it right now. Okay, so check it out. So your first high in the dollar, after getting close to its price projection, was on November 6th. You get to 99.47, have the volume, have all the above, right? 49,000 contracts. Well, you know that you can't go higher forever or lower forever with volume coming in. So what ends up happening? We get to a higher high with 23,000. You come off that high with 44. That's the first indication you get a seller. You get to a higher high again, 32. You come off that with 39. We get to a higher high today, 27,000 versus the 32. If we stay on the 99.96, which we are right now, that's saying the dollar's going to pull back. Stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow down 35, Nasdaq's off 3, S&Ps are off 5.5, and we're going to stay with this dollar for a second. So we get over to the dollar. We're bisecting and dissecting this dollar index. So what we've had thus far is this: the price projection has been met. That's a 1-to-1 price projection of the ABC structure. Now what we have is that you have these 2 days. Well, okay, so picture the first high in the dollar index, getting very close to the price projection, was 12 days ago. After we made those highs, you've come off each one of the last 2 highs with volume expanding. We get another failure out here today. You get another expansion coming off this high. Your probability goes much higher. Number one, that we're in for a real pullback. What you don't know at this particular point, let's pull this over to the dollar, is that the end of the dollar move. Now watch this. When we bring the dollar back, and you bring it back into a longer-term basis, what the dollar is doing is this, folks. The dollar is trying to break its highs from March of 2015, April of 2015, as well as, March and April. Because I had this on a weekly, 2 separate weeks. We were up at the 100.20 to 100.38 level for 6 weeks during March and April. It wasn't able to break it, wasn't able to go topside. What happens then? Well, you start moving into lower price. The reason that this is so important is this, is that you can make the case that this could be an ABC structure on the way up. And if that's the case, so check it out. We'll do it both ways. Your A point on this would be July of 2014, which is 80. I'm going to ballpark it, okay? It's 80. Your B point is 100. That's 20 bucks. Your C point is 93. So that ends up getting you a $113. Now, watch when I pull this back. It's pretty wild. You pull this back many years, what you're going to see is that we really don't have anything in between this 100 mark and going up to, bring this back on a 20-year because you got to see how this plays out. You really don't have any flack up to like 109. Because you remember, when we came down in 2002, it came down from 121. But the market had consolidated for quite a while between May of 2000 until the breakdown of May of 2002. It consolidated at its highs for 2 years. Then it broke. So the beginning of that break is at 112. So this is a big number as we're coming up to this number. Now, hey, we're going to find out. We're going to find out real soon if, in fact, that's it with the dollar. And if it is it with the dollar, what you'd look for is this. You look for an expansion of volume once again and a follow-through with that volume. What we have thus far is this. You have them making the highs, testing with lighter volume, coming back with volume. And here's the kicker. This is the thing to really wrap your head around. We got the price projection. So the market did what it was supposed to do. Now the question is, what does it want to do now? So that's going to be a big number to watch. If we look at the XAU and the HUI, they held the lows. What hasn't held the lows yet, well, it's held the lows, but it's right at the lows, is gold. Now, silver, different animal. What silver has done out here today is this. Silver has rejected lower price, has lighter volume, and, you know, is acting pretty good. 1403, you know, is the number. It has to stay inside that 1395. 1395, that's what it was pushing into today. It got down to 1385. It rejected that price and then took off topside. And you had a couple of buyers in there. Now, natural gas. Let's look at this baby, because this is going to be wild watching if, in fact, we get a bottom coming in here. Natural gas out here this morning, it hit 229 on this contract. The contract we're talking about right now is the February contract. It rejected 229. We're at 235. Setup's not bad. Let me go look at the NG. I'll look at the Z contract also, because that's still trading. And what the Z did out here today is that the Z got to 205. We're at 222, rejected it. Yeah, and you're inside the range. You're inside that range of 218. We go look at the UNG. Not enough juice in the UNG, so that's interesting. The UNG, folks, is the natural gas fund. It was 4 million shares, UGAZ. Same thing there. So bottom line is that inside that natural gas, man, I'd let that thing retrace. See how it trades in the retracement. Trades at lighter volume in the retracement, then we may have some real action. The oil market. Let's go and take a look at oil. What we have with oil is this. The oil let's see. Oh, man, this is, you know what's amazing? Now we're on 2016. Wow, that's really crazy. Instead of the fives, you're putting the sixes on these future contracts. Amazing. Okay, so oil right now got down to 40.41 on this contract. Yeah, I wouldn't be buying oil yet either. Unbelievable. So the low in this contract is 39.97. That was established on the 24th of June. But right now, bottom line, still not a go. We go take a look at ExxonMobil. Yeah, Exxon's going to look, it's up 49 cents right now, but that baby looks like it's going to get into lower price, number one. We're at 80.27. That can get down to 73.56. So there's going to be some, there's going to be a lot of trading inside the oils, inside the oil services. And it looks like, no matter how cold it's going to get, the stuff still wants to go lower. Chevron is up 86 cents right now. Same deal. Needs a lot more strength than that in order to get to higher price. You know, we've talked about being at these highs, and, you know, even when we're at these highs, how many equities, you know, each and every morning when you wake up are down, and they're down pretty good. You know, GameStop is the big one out here today. Well, there's a few of them, actually, my God, now that we pull them up. Oh, that's pretty wild. So Valiant Pharmaceutical, that was a dead cat bounce. That went from positive 3% to negative 3%. Let's just go take a look at that for a second. So Valiant, yeah, sure did. Valiant was trading at 97 this morning. Now it's at 88. The biotechs, the IBB, that is up 281, 1.5 million. There's no juice inside of that. GameStop was the number out here this morning, folks. GameStop opened down, let's see. So opened, it's only down $2.51 right now, but don't touch that. There's monster volume down at those lows. It traded as low as $33, and right now it's at $36.75. KBIO, let's see what this thing is. So this is a pharmaceutical company, Biopharma. Oh yeah, this is amazing. So this is up 50%. So let's see what this company's saying. Oh man, this is a 16. I can't wait to talk about this. So this stock just went from $1.70 3 days ago to $45 today. Oh yeah, we're at the top of the market, folks. That's what you see at tops of markets. We're gonna be right back. Stay right there.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow down 25, Nasdaq's up $1.50, S&Ps are down 5, and this equity is a real trip. So here's the news on this equity. So here, let's go over the equity first. It's KBIO, and it's a biopharma company. What the company has been working on is that they were working on some kind of a cure or a medicine for cystic fibrosis, pneumonia, tumors, cancers, all of the above. This company here has zero income. Yeah, zero income. They, so when you read this is just amazing. So you talk about a trade. Now, this is a very huge trade for the guy that was running Turning Pharmaceutical that basically killed all the biotechs when he bought a drug, and then I believe he put it up, 8,000% or something. The bottom line is that what you have is that last week the stock was up 5,000%. And so check out what this is. So the guy that was running this other company comes in, buys over 50% of the equity, and it looks like he bought over 70% of the outstanding shares, and bought those shares at an average price of 90 cents. This is on November 13th. So we're on November 25th right now, right? So watch this trade. This is sick. So yeah, November 18th, the stock's trading at $1.70. November 11th, 9th, 10th, 90 cents. The first day announcement that he has it, stock goes from $1.70 to $14.72. Friday, it goes to $23.11. Today, it's hit $45. Now we'll see whether he sells any shares, but that's quite a score, because if you look at 80% of the stock outstanding, there's 4 million shares outstanding. So what's that? 3 million shares. 3 million times $38. There's your profit. Pretty sick. Don't chase that, folks. Okay. Bottom line, just because don't chase it. That's like insanity. That now, what's really cool there also, that is what happens at highs in markets, though. That's just kind of how it goes. I mean, think about it, just still doesn't have any revenue. Someone comes in, right circumstances, right kind of market, bang, see you later. You know, and as one of our targets says, you know, anyone get lucky today with KIBO? Well, bottom line is that intraday, if you got it, I want to see intraday, if it just popped intraday too. Or it just opened that level. So today what you had, it opened at $22.95, stayed there until 11 o'clock, and then went from $26 to $45. That's pretty intense, man. If you're in it then, yeah, that's about as heavy as you can get. Pretty wild. We go and we take a look at Goldman Sachs. So our man, Mr. John Logan, kicks us off every trading day, folks. 8 o'clock in the morning. So we have live programming Monday, Wednesday, Friday, 8 to 5, Tuesday, Thursday, 8 to 6. Get it right on your cell phone, TFNN.mobi. Now, John Logan, folks, has a great program. You're getting ready to go to work. You're getting ready to look at the market. Tune in. Today what he was doing, and he was going over the banking stocks, and there's no doubt, I'm short one banking stock right now. That doesn't have to be Goldman Sachs, but when he was going over the banking stocks this morning, now Goldman is the largest weighting structure inside the Dow Industrials right now. And what is intriguing, and Tommy and I, my son, we do a 10 o'clock in the morning program, we were talking about this morning too, that the banking structure, that the Fed is saying they're going to go up in rates in December, still can't get out of their own way. It's pretty amazing, man. You know, Goldman today, Goldman is the culprit inside the Dow Industrials, just bringing it down. I know it's only down 20, 25 points or something, but Goldman is the culprit. And what Goldman's doing on a day that has no volume, Goldman is getting a slight expansion of volume. That's saying quite a bit. So someone is moving Goldman out. We'll go over to Apple. Well, here, let's go just take a look. Inside the Dow, the strength versus the weakness inside the Dow out here today is this. The strength is Home Depot. That's up 240. Coke's next, up 58 cents. Chevron is up $1, and ExxonMobil's up 57 cents. Taken away from it on the way down. Pfizer's the culprit, down 93 cents. Apple's next, 131, and Goldman 191, and JP Morgan. We look at JP Morgan, you're down 60 cents. And that still has juice too. You know, it's going to be really, I'm trying to figure out what would be the excuse that the Fed can't go from 0 to 1/4 a point on the short-term rate to 1/4 point to 1/2 point. But the banking structure, how the banking sector is still trading, is saying that December is not going to be the time. We'll find out. Bank of America, I believe Bank of America is probably still one of the largest banks in the world. Bank of America, bottom line, also moving down only 12 cents today, but it can't make it over this downdraft that had been created out there in May. And, you know, it's not that the banks have to do anything else, meaning they don't have to go get more business in order to make substantially more money. All that has to happen is that the Fed has to say, okay, we are going from 0 to a quarter to 0.50. The reason being, folks, is that all the deposits that they have in their bank, they'll immediately make more money for the bank, not for the client. Don't confuse the bank versus the client, because what will end up happening is that the banks themselves are going to get paid more just from the Fed. Because one of the most deviant things out there is like, it makes zero sense that the Fed is actually paying banks to stash money at the Fed. It's like, why? You know, it makes zero sense. But anyway, they've done that in order to bring the balance sheets up of the banks, and it no doubt has done that. Tyson Foods, TSN, I think that's TSN. So we're going to be eating a lot of turkeys, evidently. This is chickens and turkeys. It must be, it's all the above. Tyson, they're almost up 9% today. And so let's see what they have to say. So earnings came in at 88. This is wild, actually. Their sales was $10.5 billion. Their earnings per share was 63 cents. It's almost like they didn't hit their numbers, but yeah, here, check this out. So they did not meet their numbers. It was 5 cents below the estimate, but they beat on revenue, and the market's loving it, man. It's really wild. But so if we take a look at this, you're over the highs and you have volume. And there's no doubt, as one of the tigers was saying, why would the banks loan money out when they could just keep it at the Fed risk-free? There's no doubt. There's such a disconnect, folks, in the whole aspect of the Federal Reserve paying banks to keep money at the Fed. It's like people are yapping, why don't they lend it out? Why would you lend it out, all right? Risk-free. The Fed goes up, and the Fed goes up, and what, you get a piggy bank, it's just worth more money every day, but you don't do anything? We'd all love that, right? You stay right there, folks. We'll come right back. Dow down 21, NASDAQ off 1, S&P's down 4.5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Overseas out here, what you had out here today, we had the FTSE down 0.4%. CAT was off 0.4. DAX was off 0.2. All of those, what's going to get intriguing, though, is that they were down slightly, but that back off wasn't a big deal. So it's going to, specifically meaning that it looks to me like the FTSE can try to get up into higher price. We're at 6,300. Looks like it's going to try to test the 6,400. DAX in Germany, what we have is the DAX in Germany. That kind of has been hanging at the highs. Okay, this broke topside last week and it's just hanging at the highs. Volume's not extraordinary, but bottom line, it's still up there. We go take a look at the Asian market. We go to the Hang Seng first. Hang Seng down $88 last night. That's after getting to a higher high, giving it up on price. Hang Seng wants to back down. Yeah, she wants to back down another 400 points. The Nikkei in Japan, we have with Nikkei in Japan. Nikkei in Japan was up $20 last night, 19,000. And that looks like it's still going to make its way into the downdraft that had been created out there from the 20th of August. We switch back into our own market, so we go to the small caps. Small caps out here today look like they're going to also fail. The IWM right now is up 64 cents. You're trading at 117.45, and that's also continues to come into that downdraft from the August 18th, 19 area. We're doing 45 million versus 18 million today. What I do expect you're going to see, folks, this market's going to get pushed around. And when all said and done, subtly, you just have a slow rollover. Wednesday's going to be so we have today. Tomorrow will be, there'll be some trading tomorrow. Wednesday, I don't see a lot of trading going on. The first couple hours would be it. Of course, people will be on the road. Then Friday morning, the biggest moves I've ever seen, though, and this is going to be really a trip, because Friday from 9:30 to 1, the market is opened. And, we'll see whether they want to push it up, down, or all around. That being said, what I do expect you're going to see is next week, Monday coming right back, that's when you're going to get higher volatility in the marketplace, and you're going to see some selling. The indices themselves haven't been able to hold price. We're laying right where we're laying all the way back, I believe it's about 14 months now. If we take a look at the cash S&P, the cash S&P, it's 12 months. We're right where we were last year at this time. Now watch what happens, though. This is the index itself is where we were last year. What you're going to have, though, is this. You're going to have, as we get closer to the end of the year, we have a market that has gone sideways after a market that has gone up substantially the last 5 years. Now, when you look at this, if I put this on a monthly, what you're going to see is that, we go back to 2009, S&P's at 800. You go up to 2014, at the beginning, 2015, you're at 2,072. Now, because of how the market went up there, there might have been some selling. There certainly probably wasn't. I suspect people didn't have any. They might have had losses from years ago, but they certainly shouldn't have had losses from stocks they were buying the last few years because everything has gone up. Now, that being said, I can picture why last December you didn't have selling also. Why? Because things continue to go up. You're a bull saying, hey, if we took the prior year, the S&P went from 1,800 up to 2,075. So you went up 200. Yeah, you went up about 12%, right? So I can picture bulls saying, hey, maybe we'll go up another 12%. Okay? They stay in the market. Well, we didn't. That's the first part. Second part's a little bit larger. What the second part has to do with, folks, is the amount of equities that are actually down substantially from their highs that absolutely affect portfolios if, in fact, you just don't own the SPY. That's where this shakes out. You own the top 10 stocks out here that never stopped, yes, you'll be up. That's not how portfolios, however, are put together. Portfolios are put together, in these money management firms. They're put together with sectors to supposedly be diverse. Well, guess what? That diversification, it looks to me that markets all move together now, up, down, period. Bottom line is that the diversification inside a portfolio right now, though, inside the equity part of the portfolio, guess what? There's sectors that are down big. You go over to the transports. That had led the baby down coming off those highs, and we're down 1,000 points, 9,300 to 8,200. Some of the larger stocks that you'd never thought would be down, not as big as they would anyway, are the Exxon Mobils of the world. The energy, Exxon Mobil's off the high of what? 104, you're at 80. That's 24%. There's big numbers in the underlying stocks that are down that I suspect what will end up happening. You'll get tax selling in those, and the real key is going to be is that how much other buy-in do you get because of that tax selling? Because there's plenty of gains that can be taken, and if they didn't take the gains, my God, that'd be terrible. But bottom line is that is going to throw volatility into the market, and I suspect more selling than buying. And we'll see. We're going to know soon enough. Because they won't wait to the end of December. Right now, volume-wise, we're at 602 million on the NYSE. So that's going to come in low volume. On the Nasdaq, what we're running right now at 1.4. That's also that's going to be close. The Nasdaq, that's saying the Nasdaq is still no, that's not going to do one. That's going to be low volume also. So in the Nasdaq's case, that's going to be getting over the highs, having lighter volume, rejecting price. That November 9th benchmark is still the benchmark. In the S&P's case, however, that didn't make the high. That's going to be going down with light volume. So the S&P is saying that, hey, guess what? That can get into higher price once again. And the Dow Industrials, that's saying the same thing. The Dow high out here today was 17,868, where on Friday was 17,914. What I do expect you're going to see is that on the dailies and weeklies, once again, you'll get that failure on price and volume. Whole Foods, this is an equity that's down from $42, you're at $29 right now, and they have been trying to basically get people to stop saying it's whole paychecks by coming in and bringing prices down. Well, they're going to have a problem because what happens is that, I'll read the story for you. Whole Foods may lose some ground in effort to shed the whole paycheck image this weekend. A group of 20 items used in the holiday feast was priced at $87.91 at Whole Foods versus $72.28 at Trader Joe's. This is a Bloomberg survey. The 22% higher cost at Whole Foods is bigger than the 0.9% gap on Trader Joe's similar basket items last year. It's pretty intense. You stay right there, folks. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We have the Dow Industrials right now off 21, Nasdaq's off 1, S&Ps are off 450. And we take a look at, let's pull up a couple of these biotechs. So inside the NDX 100, REGN, and the Nasdaq Composite, the biotechs, folks, can actually move that Nasdaq pretty good. It's flat out here today. We got Regeneron down 890, but Regeneron likes to trade within $20 price span. So 890 is like that's like another stock being down 40 cents or something. It's a $570 stock, so that's no big deal. We'd have to get a lot more volume on the way down for any action there. Gilead, GILD, that's trading down 14 cents. That's no big deal there. Celgene, CELG. That can't handle price either. Celgene and Gilead look like they want to run to lower price, though. They're both off their highs. You get Celgene is trading 113. That's off the high of 140. That looks like it could get some action on the way down. Inside this, the IBB, let's see what we got here. So Biogen. That Biogen was the first one that got killed. So let's look at Amgen first. Amgen's trading up. Okay, so Amgen's putting juice into the IBB. So we're up today on 3.3 million. You're going into 4.8. The high is 165, though. It looks like it wants to go after that high. Biogen. Now, Biogen was the first one down off its highs substantially. Biogen is up $3.84 today. that still doesn't have any traction. This is a stock that really got smoked from $480 down to $293. Now, see, an equity like this, that's a great equity, would be something that is inside portfolios that will get sold. Because you can see if there's a tax loss seller, if they get something else, that they get a winner on the table. And what ends up happening, just so you understand, you're selling the loser, but then you have to sell the winner also, folks, okay? So you're melting those together so you're not paying tax, period. It's definitely smart to do. Well, it's smart to do if you're ending or you're thinking near the end of the equity that you want to use that has a profit. That's how that's because then what you're doing is you're saying, okay, I'm not going to sell this next year when you can do the whole tax loss selling in basically a couple days, straighten it out, and then you go from there. We go take a look at the XLY. The XLY now, this is the consumer discretionary. Inside the XLY, and John Logan has been talking about this, this is the only sector that really hasn't broken down yet. Amazon is 10.5% of it. Disney's 7.3%, even though Disney, went south. Home Depot is 6.8%. Then you have Starbucks is 3.7%, Nike's 3.7%, Lowe's companies is 2.8%. There's some high flyers in here. What we have out here today is that it is up 26 cents, $81.85. I wish this hit. So check this out. The high, folks, you have to hit the high first, is 81.87. We hit 81.85 today. He's going to do 3.9 million. It would be beautiful if it hit that high. The reason being is it's a lot. Well, the probability is higher when you actually hit the number. And it doesn't matter if you're talking about a number like $100.17 or $25.15 or $380.17. You want it to hit. If it hits the number, you're either going to stay over that number, you fail on price, you don't have enough volume, it pulls back. If you get over that number, come under the number, still have volume, it'll go right back topside. Bottom line, you wait for that test. This is Tom O'Brien, this is TFNN. You stay right there, folks. You're going to be coming right back. Dow's down 32, Nasdaq's off 3.5, S&Ps are down 5.5. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a Thanksgiving week, folks. Kick back, have a good time. If you are driving, please be careful. Hope is a renewable option. If you run out of it at the end of the day, you'll get to start all over again in the morning. Barbara Kingsolver. Big time. Market-wise, let's take a look at it out here. We had the Dow finish down 31, NASDAQ off 2, S&P's down 550, gold contract down $8.30, trading at $1,068 an ounce. Silver down 5 pennies at $14.07 an ounce. Platinum off $9.55 at $8.45 an ounce. Copper down 4 pennies at $2.01 a pound. Light sweet crude flat, $41.89 a barrel. Bonds, the 10-year up 3 ticks, 126.25. 30 up 16, 154.30. Bottom line, the 10 and the 30, folks. Bond continue to reject lower price, have lighter volume. They went topside once again. It looks like there's small ABC structures on the way up. That would be higher price, lower yield, which would equal lower price in the S&P. King dollar up 216 ticks, 99.84. The euro is down 17 at 106, and the yen is trading at 122.89. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so if we start with the SPY, we got a little divergence out here, and this is what it is. So we start with the SPY. Now, the SPY on Friday, folks, failed on price and volume. And the failure that we're talking about is getting over the November 9th high. You got over it, closed underneath it on the daily, weekly. That's a failure. Today, what we did is that you pull back 63 million shares. Now, the SPY didn't make a higher high, so that's a pullback on lighter volume. You know, we'll see whether we get more volume as we get to lower price, which I expect we will. The Qs, and here's the divergence, the NDX 100, the NASDAQ, as well as the Dow Industrials, did get to a higher high, did have lighter volume, and did fail on price. So that's harmony. That's harmony. You know, the Qs got to 114.95 today. The high of the November 9th high is 114.51. We've closed at 114.15. You've done 20 million shares. Friday, we did 22 million shares. Thursday, we did 26. Wednesday, we did 32. You can see what's happening. There's no buyers up here. It's rolling over without buyers. Gold contract. What do we have with the gold contract? Bottom line, gold contract also needs buyers. Gold out here, we're trading at 1067.50. That's at the bottom of the range. Bottom line, we came down into the 1065 area today. Now, you had lighter volume than we had hitting those lows generated last week. We hit a low of 1064, that 181 million. Still too much volume, though. That's the bottom line, folks. You did 164. So, hey, we'll see how the 1064 to 1062 holds. I expect that's going to get tested once again, probably tomorrow or the next day. The XAU and the HUI, they did hold their lows. You know, so those are the equities, the gold and silver equities. They held their lows on the daily, on the weekly last week. That's a positive indication that they do want to go higher. The metal itself is the problem child. Now, let's go over, I'm going to go back to bonds in a second, but what I want to do is I'm going to go over the dollar, because the dollar is all about metals, all about commodities in general. So, what the dollar did out here today is this. The dollar got over the highs of the 18th. That high that we're talking about is 99.96. The dollar made it to a dollar today in the index, 100.06. That's what we made it to. We did 28,000 contracts. The last high at 32,000. So watch how these highs came in. The first high, which was finishing up the ABC structure, 99.47. That was 12 days ago. That had nice volume, 49,000 contracts. We make a higher high with 23,000, but then you come off it. Here's what you want to learn out of this. It's how you come off them after you've made the price projection. So the price projection was made, you come off them with volume. We come off them first with 44,000, then we made a higher high with 32. You come off that again with 39. How we come off this high, folks, is absolutely crucial. The reason that it's crucial is that it's going to release a huge amount of information to the marketplace, whether you're in the metals market or not, because this is why. The currencies rule the world, number one. In the case of the dollar had started out at 121 in 2001. The dollar breaks down. It traded up there, by the way, for 2 years. That's distribution at highs, 2 years. When it broke down, it went from 120 in January of 2002, straight down, 2 years to 80. Didn't even breathe, man. I mean, a couple sideways moves. But bottom line, monster move down. Did a counter trend bounce up to 90, then drove into the low, which was the low of the financial crisis in 2008 at 70.80. Now, from 70.80, it's been building cause and has been getting up to higher price. This level that we're at right now, this is why we're going to spend some time on it. This is crucial. The 100.38 area, if we take that out with volume, it's a huge ABC up. It'd end up being about 112. So this level is crucial. You know, you're either going to just back down off this level, not enough strength at this time, you back down, that would set up a 92. It doesn't have to set lower than 92, but bottom line, it sets up a 92. That would give the commodity markets room to breathe. We'll see about the equity markets. That's one scenario. That would be a scenario that backs down. A scenario that doesn't back down and you go up to this 112, that would be a heavy scene, man. It'd be a heavy scene in the context of where the metals would go. I expect gold would go lower there, silver would go lower, all commodities would go lower. The stock market would probably get slammed beyond belief, because what you still have is the aspect of how many of our large companies make money overseas. And in that aspect, the currency valuations would be intense. And just to give you an idea of the difference in the valuation, if you go to the Canadian dollar, from last year to this year, you're talking, you know, we'll put this up for a second, but you're talking, if you were making reservations and coming to the United States last year, your dollar was worth $1.13. This year it's $1.33. It's an inverse correlation, and I'll do that for you. It's like 91 cents to 71 cents, folks. It's a big inversion. Stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom TFNN.com takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Let's go take a look at AMBA. So let's see. This equity here, they develop high definition video compression. Stocks down about 5% today. The high for the year is 129. The low is 44. And man, this just can't catch a bid. This is pretty, yeah. This is off 129. You're at 54. This looks like it's building cause for lower price. That's the bottom line. Some of the higher volume stocks in this low volume market out here today. Apple, folks. Apple was the culprit inside. Apple and Goldman Sachs were the culprit inside the Dow Industrials, bringing that lower. Apple was down $1.55 out here. Twitter was off $1. Allergen and Pfizer doing a deal that was down $10. Allergen was PFE. It's mostly a stock deal. Pfizer was down 85 cents. That there's going to be a cash component to that. The headquarters will move to Ireland, and they fixed that up. That technically the buyer is Allergen over Pfizer, and what you do get there is that all the cash that Pfizer had offshore, they will be able to basically use that cash, and that tax goes from the corporate tax rate in the U.S. is 35%. The corporate tax rate in Ireland is 12.1, I think, or 12.2. So that no doubt has something to do with it also. Some of the Dow stocks, we take a look at some of these Dow stocks. Well, I brought this up in the first hour. Let's go to Goldman for a second, because Goldman is right now the largest weighting inside the Dow Industrials. And Goldman, bottom line, comes down on a light day, and volume expands slightly. You know, Goldman wants lower price. It's like, okay, so, 3 months ago, Goldman's at 218. You want 189. You have a high volume swing. You have two separate high volume swing lows. They're both 172 and 167. The way that is set up, and let's go look at the XLF, is that those financials still want lower price. XLF, that was only down at 10 cents, but that also can't get into its highs. That high there is 25.62. Amazon, let's go look at Amazon. So you have Thanksgiving this week. I mean, Amazon is no doubt eating the retail business alive. And there's going to be a lot of press out here this whole week, going right up to Christmas, no doubt, as to how much we're all buying online. I suspect, folks, it's going to be a lot. Especially the numbers will be particularly large, I bet, the first 3 weeks. The reason, because so easy to shop, right? We'll see how far Amazon can go in correlation to the rest of these. Amazon's already extended. There's no doubt about that. And just so you know, you are paying $1,000 for $1 of earnings in Amazon. That's how that baby's set up. If we go, whether it's over to Target or to Macy's, bottom line, they don't have any traction whatsoever. They've come down dramatically. Walmart has come down dramatically. Let's go take a look at a couple of the car companies. Ford's at $14.55, and that's not it's not that far. The thing that's mind-blowing about these car companies, they should be at like all-time highs, because the number of new cars that are being sold right now, it's pushing 17 million this year, folks. And 17 million has been the high watermark thus far, meaning right before the crash in 2007, I believe it was 15, 16, almost pushed 17 million. So that's a big high watermark. They do expect in 2016, by the way, that they're going to still sell another 17 million. After that, though, this is the dealers themselves. They expect a little pullback. And that pullback it has to do with a demographic pullback. And this is really cool, because they get this thing down pat. Well, I don't know if anyone always has it down pat. But specifically what I mean is that the age demographic it comes in chunks. In the United States, actually in the world too, but in the United States for sure, it comes in big chunks. You have the baby boomers, then you get, right after the baby boomers, there was a drop off dramatically, and then like 15 years after that, boom, you got the millenniums, which are huge, which are bigger than the baby boomers. So as the amount of people that are out there versus what they're buying, it makes a huge difference. Big Blue still can't get out of its way on the way up. Big Blue has gone from that 210 down to 138. Let's go to our man Dave in Clearwater. Hey Dave, what's going on?
Tom, what's going on, my friend?
Oh man, I was watching that natural gas all day and I didn't bite, but we'll see.
Yeah, we shall see. It's actually, I'm not calling about natural gas for a change.
No, you call it white oil. I know.
But I'll tell you, man, I've been looking at I follow this thing like it's my job. And
well, now it's my job now. You got me following. It's my job now, so I can follow you.
Oh, absolutely, man. I mean, come on. The margin requirement's ridiculous.
It's perfect.
The
it's
volatility
good.
is there.
It's good. I like it, man. I like it.
From a trading vehicle, dude, I know you. I know. It's not
it's
like
the ultimate. I know.
That's you all day long, man.
I know, man.
But just keep in mind, though, you've got Tom. I'm telling you, take it from someone who's, don't get me wrong, I've made money from trading natural gas, as you all know, but I have lost a lot of money from trading natural gas. And when the pattern completes, you must take profit.
Oh, it's not even close, right?
Just you got to have that,
just so you know, folks,
order
natural gas is 10,000 a point. Yeah, it's a monster.
Yeah.
So we're going to look at oil?
Well, I want you, if you don't mind, I want you to look at oil mainly because of the Canadian dollar. I'm starting to like the way this Canadian dollar is setting up, and if we can get a reprieve from King Dollar pushing down the commodity.
Okay.
Because if you look at the correlation, you put them up, I'll tell you, Tom, I can make a case that it's not petro-dollar, it's petro-Canadian dollar.
Okay. Hey, listen, man, I like what oil did intraday. I mean, you had buyers. There were buyers in this at $6.50 this morning, folks. Okay, oil went from this 40.87 up to the 42.50. You pull back. I mean, Tommy and I are doing the program this morning, man. This pullback, it was early, but it was on such light volume. Oil pulled back again to 41. And then you had buyers again up to 42, 43, So, and oil, as long as you make sure that you're getting in and getting out, also is a nice vehicle to trade, folks. It's, a decent vehicle, no doubt.
It's beginning to look like, I could be wrong, but it's beginning to look like a bottom. I'm not saying today or next week or even the next month or so, but it looks like a bottom starting to form.
Yeah, I want to see this 41 tested for sure. To me, that's a high volume low that could, blow that $40 out of the water. This contract has $39.97. So the way that come down today, it's like, man, you're going to be back down there.
Yeah, for sure. And at this point in time, it's hard to know if it's the dollar or this continuing supply, because natural gas is directly correlated in terms of the shale production to the oil, and we're actually finally starting to get some rigs taken out of it. So I'm hoping between the Saudis and rig count starting to go down for the first time in forever, that we'll get a bid under oil, which will then put a floor in the Canadian dollar.
Oh, listen, man, I think if this dollar index, if that's the top of the move, it's reached the price project. If that's it, we'll have a field day with all these futures, man. I mean, because, cooking, brother.
Thanks, Tom.
Have a great one, man. Have a safe one. You stay right there, folks. We're going to be coming back with our man, Mr. Kevin Hinks. And, of course, Kevin is the best option show on the planet right here every Tuesday, 12 to 1. We're going to be right back with him, Kevin. Folks, come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member, FDIC, and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finish down 31, NASDAQ off 2, S&P's off 4. And as we do each and every Monday at 20 past the second hour, we have our man, Mr. Kevin Hinks. Kevin, folks, does an outstanding option show here every Tuesday, 12 to 1 Eastern Standard Time. Now, all the programming at TFNN, folks, we do live programming starting at 8 o'clock in the morning. Goes to 6 in the afternoon. You can get it right on your cell phone, tfnn.mobi. If you'd like to just get the audio. You want to get the video, just go to tfnn.com. On the right-hand side, you'll see Watch Tiger TV. You hit that. Our service will understand what type of device you're on. You get the audio, plus you get the video. 12 to 1 tomorrow. Outstanding program. Now, if you haven't test drove the TD Ameritrade Thinkorswim platform, folks, it's a great time to do it. I use it every day, whether I'm doing options, equities, currencies, or commodities. It's on one platform. I've been using it for years. It's phenomenal. As Kevin does the show on Tuesdays, and we're going to be adding a few more shows on here, swim lessons, you'll be able to see how powerful the platform is and how easy it is to use. Kevin Hinks, what's going on?
Happy Monday, Tom. Good to talk to you, buddy.
Happy Monday. We got Thanksgiving happening.
Yeah, slow week. But you know, a couple things going on. Not a lot. The overall market's kind of just drifting.
Yes. And this is always a tricky week. That's a tricky week, man. There's no doubt about that. You know, it's like, okay. I remember, Kevin, my God, it was a long time ago, but I think it was like 96 or something. And the bull market was raging anyway, folks. But what ended up happening on the day after Thanksgiving, that Friday, no matter what you came in and bought, went up. It was like crazy. And then on that Monday, the following Monday, the market's down 10%. It's like, oh my God.
Well, you know, we were talking about that on our show today. And, you know, this is kind of like a summer trade where there's a lot less people looking at the market this week.
Yes.
So you got to be aware of that.
Yes.
You know, it can move bigger on smaller volumes.
Yeah, and it will. Right? Yeah.
Right.
I mean,
right.
And what's possible here, folks, the thing that's amazing about what Kevin and I are talking about, and when all said and done, at the end of the week, there'll be no movement. But
right, exactly.
You know, yeah, exactly.
You know, the market makes a thrust one way or the other and then kind of just drifts back to where it was.
Right. right.
You know, I mean, look at oil today. Oil was nuts today.
I'm telling you, man, that first run up to 42.5, and
lots of noise today in the markets, huh?
No doubt.
In the oil markets, lot of chatter, a lot of noise.
Yeah, and I'm going to let it hit that bottom first, man. I mean, it's, you know, and I was thinking of you earlier today, too, because, see, I've been watching this dollar in a huge way, and I do these ABC structures, Kevin, and it hit the A to B equals C to D, okay? So, but we know how this goes. That's a 1-to-1. Is it going to extend out, you know? It's like, okay,
sure. Man.
You know, if it doesn't, there's a lot of opportunity either way, but if it doesn't, then it's like, okay, man, these commodities that got killed so bad, there'll be a nice opportunity there because this dollar.
Big reversal today in the grains. Did you notice that? All down big and healthy in the morning, and then came back and all finished higher.
Yeah, look at that. I just pulled up wheat. Okay.
Yeah.
Oh, I like that.
Corn and soybeans very strong after a really weak opening.
See, I got to say, I'm going to watch those closely because that's a correlation really for the dollar too, right?
Of course.
Yeah, right.
Grains, believe me. When I was standing on the board of trade trading grains,
yes,
in terms of directional and what I'm doing there, I got one eye on the dollar at all times.
That's cool, man. Okay.
Yep.
Look at that run, man. That was I got Con up right now. So that ran from 366 to 373.
Yeah, but look at the day graph on them. They all were lower this morning. Soybean meal, which I trade heavy, was down like almost $4 this morning and finished up.
Really interesting.
Yeah, that's a big move.
No, that's a good move. That's what you need. And
but Tom, what is it that we're talking about? Right, the market's thrust one way and then drift back.
Yep. Yeah. So patience.
You know?
Yeah.
Right.
You know, no, It's going to be wild. And natural gas, that poor thing, man. You know, it came back out here today too, but that thing, man, is blowing people's minds, man.
It's going to levels people never thought it could go to.
I know, man. Seriously, man. It's like it's.
Yeah. It was. You know what? I thought it was nice to see some of the retailers getting up off the mat today, though.
Yeah.
Macy's. You know, some of these people that have been really beat up.
Yeah.
It almost seemed like the sellers just kind of backed away from it. Nordstrom and Macy's, Target were all up nice today.
Yeah, and you know, what's cool there is that even if you got, like, if I look at Macy's, so Macy's just went from 72 to 40. Even if you get a dead cat bounce, you could get $50 out of it. Yeah.
You don't need much to have a good little run in there.
No, you don't. You don't. And what does happen, I mean, it's particularly, you know, it's interesting. I love Macy's and I love Nordstrom's.
Right.
But I know what happens too is that even that, I don't go shopping a lot, but for that 10% that I would have went there and all of a sudden I buy off Amazon, I was like, oh my God, you know what I mean? But you know, those two would be the stores that would seem that they're not going out of business. We know that. The real question is how much are we ordering on Amazon, or in fact, are we just not buying clothes anymore?
It's funny you should say that because we were discussing Macy's and Nordstrom, and I said verbatim exactly what you said. I go, neither of these companies are going out of business. They're too well run.
Right.
So they make it hit a little bit, but they're not going anywhere.
No, they're not. And well, you know what's intriguing? I heard the interview with the Macy's CEO, and man, he doesn't mince his words. He said flat out, and it was music to my ears, and I'm sure a lot of the consumer ears. He said, "Hey, listen, man, we have too much merchandise. I wrote this thing down for 20 because when he came out with the earnings call, he was saying, hey, man, we're going to do terrible in the first quarter also." And he says, we're going to have so many sales, it's going to be unbelievable. I said, well, that's good to hear. But
yeah, right, exactly.
And it's unusual hearing a CEO say that, though, right? Prior to it. Do you know what I mean?
Right.
It's like, okay, we got to move these shelves off, you know? So.
Right.
Now, as we wind, you know, I was talking about a little bit earlier, Kevin, on the first hour. So picture the S&P is kind of where it was at last December. Prior to that, for the first earlier 5 years, we've gone up. So I can picture why people, number one, probably didn't have any losers, and there was no tax loss selling. It's going to be interesting this year to see what kind of selling there actually is, because we haven't moved, and there are a lot of equities that are down pretty good. You know, so there's going to be probably some opportunities there, you know, in the markets and the option markets coming, you know, at the end of this year going into next year.
Right. Think about this, Tom. For those people out there with a good, healthy portfolio.
Yes.
This is the kind of year. Think of the returns you could have made like covering your stocks with options all year.
Oh, it's huge.
If you were selling 1, 2, 3, 2% above the market each month,
right,
the returns you could have made on a flat to little bit down market.
That's huge.
Yeah. You'd have had a lot. It had saved your year. Let's put it that way.
It absolutely would. And, you know, folks, Kevin's show is on tomorrow, 12 to 1 Eastern Standard Time. And what TD Ameritrade Thinkorswim specialize in, folks, is setting up strategies so you understand the market. It doesn't mean that you're going to make money or lose money. What it means is you're not going to get backslapped on the back of the head, not knowing that you put one strategy on thinking you're going to make money, you know. Because if you're in the option market, I don't know if this happens to everyone, but it probably does, that you got the call right, but the strategy wrong.
Exactly. We you know, it's funny. We talked about that today, Tom.
I love it, man. Well, I can't wait for the show tomorrow, brother.
All right, buddy. You have a great day.
Have a great night, safe night. Look forward to speaking to you tomorrow. Have a great one, man. Thanks. You stay right there, folks. We're coming right back. Dow down 31, NASDAQ off 2, S&P's down 4. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Couple of Dow stocks out here. We had Caterpillar down 12 cents. Boeing was off $1. You had Disney down 65 cents. Let's go over and take a look at Disney for a second. So Disney right now down 65 cents, trading at 119.42. This equity, look at this, it's made it right to its top. Okay, so this equity had blown apart August 4th. August 4th is trading at 122. The 5th, it goes down to 109. The high point there is 122.08. The low of that day is 120.68, and we went right to that level. Let me put this on a weekly for a second. This will be amazing if that just did the full retracement and can't handle it. Disney's going to be a big heads up watching how this shakes out, because what you did is that you came down on a weekly basis with 155 million. Last week we went up with 35. It looks like it's not even going to be able to handle the 120.25, which sets up lower price. Now let's go over and take a look at a few more commodities, because the currency move here is going to be really important. The dollar, the Canadian dollar, the Aussie dollar. Kevin had just brought up a great point about how these grains moved out here. So I'm going to look at the soybeans first. So soybeans this morning hit 844. Here at 864, they rejected lower price. And all of these that we're looking at right now, folks, these have got decimated, just as the commodity market in general. This is down from May of 2014 from 1209 to 864. So we'll see if that's a bottom, but that's pretty cool to wrap your head around a bit. That's soybeans. We take a look at wheat. Wheat is at 497. This actually made a higher low, and it has volume in it. Yeah, this is intriguing. And if we take a look at wheat, we pull this baby back. This is also off from, looks like 760. If we went to the ETF structure, Tucrium, has these ETF structures. WEAT is wheat. That's up 22 cents today. You're trading at 963. The low actually is 924. And yeah, the top of this consolidation here is 1024. So that's a game. If we go look at the CORN, that's the Tucrium Con Fund. That's trading at 2202. And this also, this I really like this one. This is interesting. So this one here, this got flushed down big time on August 12th. Went to 2167, 312,000 shares traded. Yeah, 2167. Gets up to 24, comes back down to 2150 with 396,000 testing. No, it's 39,000 evidently. Yeah, 39,000. Oh, cool. Testing 312,000, and then last week we got into 19,000 testing. That's a decent setup too. That's the setup there. The con wants to go to 2354. You're at 2202. SOYB, I believe, is the soybean one. Soybean, yeah, Tucrium soybean fund. That was up 16 cents today. So this one here, same deal, man. Yep, the 24th against, well, actually the 12th too. Yeah, whatever happened the 12th inside the soft commodity market, I suspect that's when the dollar probably went to the moon. But what you do have inside there is that it comes down the 12th, comes down the 24th. It tests the lows in the 24th, 30,000. I see today's a test and a rejection. This is a good looking setup, man. These beans are a good looking setup too. I'm going to go look at the actual soybeans inside the future. So hey, look at this again. So these are up 6.34. Well, you need a second sign of strength, no doubt, coming off the bottom. We'll see whether they get it. So when you put that together, this is going to be a good number watching how the dollar reacts tomorrow and the following day. Because if we go to the Canadian dollar also looks like it topped out today, meaning you're at 133. The last high was 134.57. That is setting up that, hey, guess what? You can get a pullback. We'll find out if that's a pullback, because these trades have been one-way trades. If we go to the Australian dollar, this thing also, had got hit, number one. The Australian dollar went from 95 down to 70, down to 69 to be exact. Now, the Australian dollar has been basing out since September 4th. But if that's what we have happening, meaning that this would be the end of the higher move for the dollar, you would see the Canadian dollar would get stronger, our dollar gets weaker, Australian dollar gets stronger, our dollar gets weaker. In both those cases, in Australia, that would have to do with metals and mining, or all of the above. That, as those prices move up, what happens? The economy gets stronger. This is the fundamental take on this, by the way, okay? Well, I just gave it a technical take. The fundamental take goes like this. Metals prices get higher, iron ore gets higher, your currency gets higher. That is saying that's coming off. On the oil case, it would be the petros, as Dave from Clearwater was talking about. So that's going to be big turns in the marketplace, folks. If you can catch those bigger turns in the marketplace, that's where one of those situations are that you can trade that for long periods of time, and the market itself saves you many, many times. And what I mean specifically when the market saves you is that we're all geniuses in a bull market. That's what it comes down to. So we'll see where that whole thing, comes down. I expect what you're going to have. I wouldn't be running into any of these this week because, as Kevin said, they're going to be pushing. This market will get pushed around very quickly this whole week. By the end of the week, we'll probably be flat. Next week, though, I'd say you get some real good action out here. There's, thus far what we've had is that the S&P did fail. The Dow Industrials failed. The S&P failed on Friday. The Dow failed out here on Friday also, because the Dow didn't get to a higher high out here today either. The high on Friday was 17,914. Today was 17,865. You just back down slightly. What did get to a higher high was your NDX 100. Let's see where the Russell stood out here. If we take a look at the IWM, the Russell also got higher. We're trading 117.39 inside the Russell, but the Russell, with that saying, now watch this. Oh, this is going to be wild. The Russell is saying that can go up to that high of 119.36. Why? Because we closed over the highs of Friday. You did have lighter volume, but you're right next to that high. Now, this is where this gets wild, is that if, in fact, when I was just talking about those commodities, if the commodities are going to move higher, inside the Russell 2000, those are a lot of those equities, folks. The reason being is that equities themselves got killed. So you have the small oil stocks in there, small mining stocks in there. That would be a correlation that you could get some juice inside that Russell 2000. This is Tom O'Brien. This is TFNN. Stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. And folks, as you come over to our website at TFNN, you're going to see right under breaking news, when we talk about the Nadex platform, you're going to see there's a couple great articles there. The first one is high probability trades with binary options. And then on the second one, right under there is the XLE divergent pattern. That's with John Logan. He wrote a Bloomberg brief, so check that out right in the front page of TFNN. You're going to see the first one, high probability trades using binary options, and that was written by my son Tom. So check out both of them right under the breaking news as you're over there at TFNN. So when we go into the market tonight, looking over the Nikkei, what you have first with the Nikkei is this. Nikkei last night, up $20. You're at 19,879. Bottom line, looks like it's going to try to get up and into the downdraft. The Nikkei hasn't been able to make it as far as the U.S. markets have. In August, the Nikkei was at 20,600. We're 800 underneath that. I expect I'm going to try to make it a little higher. That's about it. See ya. Don't want to be here after that particular point. We go to China. We take a look at the Shanghai in China. That was down 0.5% last night. That's trading at 36.10. And that market looks like the counter trend bounces over. You know, in August, as this started down, that was at 37.88, got down to 29.47, 28.50 rather. What a hit that was, man. 1,200, 12.26.40. Oh my God, that's pretty intense. That's after being already down from 5,100. Bottom line is that, you know, in 5 days it went from 3,800 to 2,800. You do a counter trend bounce up to 36. Right now, we're at 36.10. The way this traded last night, though, it did just kind of like our markets did today. It tried to get to a higher high, couldn't handle the higher high. Now it's going to go after the 35.19, and we'll see as it goes after that 35.19, is there expansion of volume. What is wild on this Thanksgiving week, folks, is that you're going to be able to see how our markets really kind of rule the world, too. And what I mean specifically is this. As our markets slow down, you know, tomorrow will be a decent day. Wednesday will be very slow. Wednesday really, for all general purposes, is the end of the week. You'll see the Asian markets also slow down. The European markets will slow down. And, you know, they're both opened on Thursday and Friday. They both have full weeks. But what you will see, you won't see a huge amount of movement going over there. The key that we could get some movement in, not the markets in general, it's going to be that dollar. The dollar, our own dollar, the euro, and in fact, let me just take a look at this pound for a second. because the pound also has been taking some heat. So the pound's at 151. We pull this back a bit. It's down from 170. It's at the lower end of its deal right now. Yeah, 150 is the lower end of its deal. And, you know, that is going to be, I suspect, where most of the movement is going to come from. The oil is right at the very low, so we're going to be watching oil and gold big time, because that oil contract, that came down today with volume. It did reject price, but when you come down with big volume like that, that's saying that oil wants to come right back into that low. We'll see if it cracked that low. And let me tell you something. The oil companies and the bulls, they're going to try to defend that $40 level in a huge way. They have to, because the bottom line is that you break that 49, and you know, you break it by 75 cents a dollar, big problems. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow. Wow! Go get them, folks.